All right. Well, let's get started. I see we have some people jumping in right now. So, for those of you that haven't ever met me or know me, my name's Tyler Miller. I run a real estate team here in Minnesota in the Twin Cities, and I've been in the industry for about 12 years, full time, and have been doing my books wrong the whole time, basically. And I think, like all of us that are either watching this video live or the recording, you're all in real estate. You're all, those people that are the self-starters. I can handle it, do it myself, all that stuff. And you probably have what you feel are pretty decent books, but my guess is they're not very good like mine used to be. So I'm excited for you guys to learn a little bit about what Austin and Build Bookkeeping, his company, does specifically for us agents. It's pretty awesome. I have not come across someone that is doing it specifically for agents. So without further ado, I'd like to introduce Austin Seward. So Austin's the owner of Build Bookkeeping and also a team leader. And I'll let Austin tell us a little bit more about himself.
Yeah, awesome. Well, I'm really excited to be here. Thank you for your continued business with us, Tyler, and enjoy working together, talking real estate sales and also bookkeeping and stuff like that. So super excited to be here today. I want to start out with this one question. And for those that are on right now, drop this in the chat. How many of you guys got into real estate for the freedom? And that, Tyler's a yes. I am 100% a yes. But if you got into real estate, whether that's time freedom, financial freedom, just drop that in the chat, because that's going to be the core foundational message of what we talk about today. So as we go through things, Tyler's going to be kind of the moderator host. If you have questions as I'm going through my presentation, put it in the chat. Tyler said, I think there's a little bit of a delay, and when you put it in there, I'm going to look at it. So we're not ignoring you if you type something in and we don't respond immediately, but Tyler will facilitate throughout this.
Yeah, there's about 20-second delay, but there's someone in the chat, Kyle Coble. He said, "You made me." Is that?
Good to see you here, Kyle.
I was like, I don't think I made Kyle do anything. But yeah, so anybody that comments in the chat, we're open to all your questions as we go. I'm going to monitor that. But again, it might be like a little delay. So just know we do see them, and we'll get to those as we go. But without further ado, Austin, take it away, buddy.
I am going to share my screen here.
And also, just so I don't bury the lead and explain why the hell I'm even on here. I'm very passionate about like doing things the right way in real estate. And I reached out to Austin. I know him through our group within EXP, and I reached out to him because he does a lot of good stuff with just running a business, and I could see that. And I was connecting with him. He was helping me, and then he let me know he has this awesome company that he is now running. And so I am also one of Austin's clients, and I've been working with you and Becca now for, I don't know, I feel like 4 or 5 months probably at this point. And my tax guy has already seen my books, and he is praising Austin and Becca for what they've done. And it's given a lot more transparency to my business, running a team specifically, what expenses I should be actually using for that calculation, and what ones I shouldn't, and how my commissions get split. And it's a little complicated. So that's why I'm on here. It's not just for my good looks. Austin asked me to do it because I'm extremely attractive. No, I'm just kidding. It's because I'm his client as well. So anyways, with all that being said, take it away, Austin.
Sounds great. So yeah, a little bit about me. Tyler mentioned, I am the owner of a real estate team here in La Crosse, Wisconsin, western side of the state, right along the Mississippi River. We also have a team of agents in the Milwaukee area, where I grew up. Co-owner of Build Bookkeeping, along with my beautiful wife in this picture, Becca. So we started this bookkeeping business, really started it about a year ago, started doing just kind of our stuff to start. And now we're opening it up to more real estate agents, teams, and investors is who we specialize in working with. I personally own over 100 rental units in the La Crosse and Milwaukee area, all purchased within the past 4 years. We'll flip 10 to 15 homes in the next 12 months. And the co-host of a podcast called the Pay It Forward podcast, which is not about dollars and cents. It's about the opposite of just being a good person or building a successful life outside of finances looks like. So if that's something that intrigues you, to make sure to follow us or subscribe to our channel on YouTube and stuff like that. So go ahead.
I was just gonna say, if any of you guys thought you were doing like lots of things in real estate, if you're like me, we're not doing anything now because Austin has acquired 100 rentals in 4 years. Just like, what even happened there? But I think it's because he understands numbers a little bit and can make some more educated decisions for sure.
Yeah, so I'll share a little bit about that. I can't really talk about bookkeeping without talking about a little bit my story and where this passion for bookkeeping and financials came from. So this is a picture of me in front of my first property ever, which was an owner-occupied duplex. I was 20 years old, still in college, scrounged up every penny that I had to buy this property. And this was really the start of a journey that I went on to try to create freedom in my life. And this was really my why from the beginning, was to create not only financial freedom, but time freedom through real estate. So one thing led to another. Throughout the course of the 4 years after this picture, like I said, purchased over 100 rental units, flipped a bunch of homes, did a lot of really big remodels and construction projects, which led to big refinances and a lot of money going in, a lot of money going out. Started from me selling houses just as an independent real estate agent to building a team of real estate agents that has sold over 100 deals a year for the past few years in La Crosse and Milwaukee, and just had a lot going on and growing, all with the goal of creating that freedom in my life. But in the heart of it, I felt the complete opposite. I felt stressed. I felt anxious. I was making big decisions based off of gut feeling and hoping that hiring this person was going to work out, or hoping that buying this property was a good move. And as I bought more properties and added more agents and sold more houses, our revenue was growing. Like that, obviously, if you sell more houses, you gross more money, but my cash in the bank wasn't growing. And if it was for a small period of time. It was not for an extended period of time, which causes anxiety, which just causes stress. And this whole goal of creating freedom through doing these things just was not there. So that's where this passion comes from. If this relates to you guys, maybe not in this large of a scale, but if it relates to you guys at all, that you're making decisions based off of gut feeling, maybe you're not paying yourself consistently as a business owner, you don't really have a good grasp on the ins and outs of your business or multiple businesses, just put that in the chat. Give me a yes, because then you're in the right room. So with that being said, what we are going to talk about today. First off, the importance of having clear and timely financials. Why do you need it? Like fundamental, basic 101. If you didn't have an interest in getting your financials together or learning more about bookkeeping, you probably wouldn't be here. Second is to break down the P&L of a real estate agent. So there's a lot of bookkeeping businesses. There's a lot of CPAs. And every business and industry has their own intricacies that go along with it. So running the P&L of a real estate agent or team leader has a very, very specific set of intricacies that goes along with it. So we're going to break that down, what that looks like, how I recommend setting up your P&L. Going to give you guys 4 bookkeeping strategies specifically for real estate agents and team leaders that you can implement into your business in 2024. So whether you hire us to do it, you have a bookkeeper that you like and you want to bring these strategies to them, or you use your CPA, or you do it yourself, my goal is not to sell you on why to use Build Bookkeeping today. If you want to find out what that looks like and are interested in that, obviously we would love to invite that conversation. But the goal is just to help you guys have a clear understanding of the financials of your business, and ultimately to be intentional with where you're directing your monetary resources and empower you to take control of your business finances. So with that being said, Why do you need it? Why the heck do you need clear and timely financial reporting? Well, the IRS says you do. Basic 101, right? The IRS, you have to have some form of bookkeeping in your business. We are all salespeople in real estate, but we are also business owners in the eyes of the IRS. So not everybody needs to have their financials dialed in like I would like everybody to, but you need to have some sort of bookkeeping and record keeping in case you were to get audited. You have to have something to show the IRS, and you need to have something for your CPA to do your taxes on. Your living room doesn't look like this at the end of the year. This is a real picture of one of our current clients last year, tax season, and what their living room looked like. An absolute mess, stack of receipts. And Tyler, you talked about how happy your CPA was, and he's already looked at your books. He's probably not going to be happy if you walk into his office with a stack of receipts like that.
No, I mean, I was at least nice to him. I would scan every receipt in, but that was still terrible and took way too long and absolutely not necessary for our business. So yeah, I've definitely been in this exact picture before.
Yep. And ultimately, guys, so you can work on the business and not in the business. So in the description of this event, if you guys saw it from our Facebook event or my Facebook post, I talked about being intentional. I'm a firm believer that all of the properties that I own, the money that's in my bank account, the businesses that I have, they're not mine. I'm enlisted with managing them and being good stewards of them on my very short time here on earth. But they're not mine. They could be gone tomorrow like the wind. So it's my job to have a clear understanding of what's going on so I can be a good steward of what has been given to me to manage. So to be intentional about where your money's going, to pay yourself consistently as a business owner and not feel guilty about taking money out of your business account and putting it into your personal account, like having a method and a predetermined percentage or dollar amount that you pay yourself consistently without feeling guilty. So you guys can make investment decisions if you're interested in buying real estate and getting on a plan to go towards that goal, to make hiring and firing decisions, to make marketing decisions, to build a business with a predetermined healthy profit margin, ultimately to operate based off of logic and numbers and not emotion and cash in the bank like I did for a very long time early on in my business journey. So with all that being said, I'm going to give you guys the 4 strategies that we use with our clients, that I use in my personal bookkeeping, that you guys can take back and implement into your own books. So strategy number 1 is to record GCI as top line revenue. And we'll go back to this. So if you don't write it down right now, there'll be other slides that have all this on there.
You'll also, anybody watching live or their register will be emailed this recording as well.
Cool. So step 1, record GCIs in revenue. So a lot of people think that whatever gets deposited in my bank account, that's my income. That's my top line revenue. It's not really true. There are expenses, and in a lot of times, major expenses and big dollar amounts that are taken out of your check before it gets deposited into your bank account. So it's important that we're recording our top line income revenue as our GCI, whatever your percent of the sale price. That is our top line revenue. And this takes a little bit of manual work. If you guys use QuickBooks or an accounting platform, it's not as simple as just categorizing the deposit in your bank account as income. You do have to do some manual steps to create a journal entry and kind of do backwards math. But it's important to do because a lot of the business decisions are made in the cost of sale. And we refer to the cost of sale as your ninja costs, right? They're costs that you don't sometimes even know are there. They can be very, very big expenses that are paid to your brokerage, to your team, to your transaction or listing coordinator, and all of those things are good things. And you choose to be a part of those things in return for a set amount of value, right? Agents join a real estate team for the value that it provides and the systems that they have and the leads that they have. You join a brokerage because of the financial model that they have and the value that that brokerage provides. But all of that stuff needs to be quantified to a set dollar amount of what you are paying your brokerage or your team. Or as a team leader, what are you paying out to your agents?
And I'll just really quick chime in because I was at a different brokerage before EXP, and I was on, like a 90-10 split there, let's say. But I never really thought about the 10% as like a cost necessarily. I just always like looked at what my check was after I got it. I never like went back and like tallied it up until much later in my career. But if I would have kept a really good documentation on that, it probably would have opened my eyes to some things a lot earlier on. The keeping track of the cost of goods sold, I think, is something that most of us realtors don't do because we're just excited about the check that we receive, right? We don't, like the other expenses, they're there, but I got this check. Let's just move on. Yep. So I think this is something that was a big eye opener for me too, even talking with you guys. So
yeah, and like you said, I mean, they're not small expenses. So looking at this P&L here is an actual P&L from one of our clients who's anonymous. But this is 1 month that the total cost of goods sold is 50% of revenue. It's not like it's a couple $100 that, if we don't track it, it's not the end of the world. Like this is 50% of the revenue of the business is going out the door before it even hits your bank account. So that's really important that we're tracking that we identify what percentage that is. For a team leader, you have to be able to identify what percentage is getting paid out to your agents of your total commission income. So your GCI, your total income, minus those ninja costs, your cost of sale, leaves you with your gross profit. And your gross profit is what actually gets deposited into your bank account. So this $32,656 is what actually gets deposited into your bank account and what you have to operate the business on. So that's the first strategy. Record GCI's top line revenue. Second strategy, and if I'm going through this too fast, guys, or if you have questions, Tyler's, I can't see the chat box.
I'm watching it, yeah.
And so put questions you have in the chat and we'll answer them as we're going through it. But the second one is to separate your expenses into 3 main categories and establish a percentage for each. So these 3 main categories are your marketing, your people, and your overhead. So every one of us that are in the real estate business have these expenses. Some may not have people expenses, but if you have a transaction, if you have a VA, if you have an assistant, somebody who's helping out with your deal, stuff like that, you'll have a people expense. Team leaders will obviously have a bigger people expense than a solo agent, but each one of us has these 3 big buckets of expenses. So going back to the same P&L, if we look at our expenses here, all of them are broken out into these 3 buckets. And this is a super condensed version of the P&L. It's probably a 3 or 4 page P&L that wouldn't work for a PowerPoint presentation. So if you were to click these drop downs under lead gen and marketing, there would be different buckets like online lead gen, billboards, general advertising. Under management and admin staff, there'd be officer expense or officer staff. There'd be VA employee wages, all broken out underneath that. Same with your overhead. You'll have your office expense, you have your systems, stuff like that. But it's all broken down into these 3 buckets.
Yeah, you made this look very simple compared to like the full report is like, I mean, it's great. It's very transparent. This is definitely the simple view. But I love that you show all that stuff because you can get really dialed in on the problem area.
Yep. And for most people, like we don't need to budget a percent of every single line item on our P&L, right? We just want to look at high level, like what percent do we want to be our cost of sale? What percent do we want to go towards marketing? What percent do we want to go towards people, towards overhead? And establishing what percentage that is before the year even starts in 2024. And building and developing a budget for that. And then you can make your decisions throughout the year based off of, are you staying on pace to hit that percentage? Are you under that percentage, over that percentage? And you can make decisions based off of that. But just looking at those three big buckets, establishing a percentage for each will get you moving in the right direction to control what expenses those are and really to predetermine what your profit is. And I'm super passionate about Profit First. If you guys haven't read the book, read it, look into it. It has changed my life. We're not going to talk a lot about that today, but the whole concept of the book is to develop a predetermined percentage that you take first from every dollar that goes into your bank, that you're taking that money out first, and that's a predetermined percentage. And that all comes down to having the right economic model of your business. So that's the second strategy.
I'll put that book recommendation in the chat too.
Totally. Third one is to separate your direct and indirect business expenses. So when this was introduced to me, my mind was blown. Like, as an entrepreneur, as a business owner, I want to pay as little as possible in taxes, right? Nobody likes paying taxes. We all want to pay as little as possible. So you want to write off everything under the sun that you can. But if you're looking at a financial statement and it has all of those personal expenses on there, it might show that you're not making a lot of money when in reality your business is. Or maybe it's the other way around. So establishing a P&L right here that separates the direct income and expenses of your business with the indirect income and expenses of your business to give you a total net number of what your taxable income is. So this is a report that you can look at, one report, and this is the same month that we were looking at before. So the same month, our direct net income of the business was $24,000. So that's the number that matters to us if we're looking at this in the eyes of a business owner. All of our decisions that we make are going to be based off of looking at that number. In the same month, we had $7,700 of personal expenses that we wanted to write off against our business and not pay taxes on. So that's in here as well, which leaves us with a taxable net income of just a little over $17,000. So most CPAs and accountants, if they're doing bookkeeping, all of this will be on one report, and the number you'll see is I made $17,000 this month, which making $17,000 is great, but that's not the true profitability of your business, and you shouldn't be making decisions based off of that number. It should be off of the number that is your direct net income. So my mind was just blown that there was a report that I could see all of this on one page, that I didn't have to track like all my direct business expenses and then keep my personal stuff on the side and then give it to my CPA at the end of the year. Like, this should all be done in your regular monthly bookkeeping, putting it all into the system. There's no extra work at the end of the year. There's no guessing on what your taxable income is going to be at the end of the year. It's all here for you to see every single month. So if you guys use QuickBooks, this is done with the class feature in QuickBooks. So you just create a class for direct and a class for indirect. And when you go to categorize that expense, you just have to class every one for what it is.
So we do have a question in the chat from a good friend, Michelle Lundeen, badass team leader out of the Cambridge area. She said, what are considered indirect expenses?
Great question. So, for example, I take a W-2 salary from the Seward Group. That is only reason that I take that salary is for the tax benefits, right? So I only have to pay FICA tax on my salary. The rest of the income from the team, I just pay as distributions. Or I pay taxes as if it was distribution. So I take my personal salary and put it as an indirect expense to the business. If I'm going out to eat with family and friends and we talk about the real estate business, technically it's a write-off, but did I really need to go to that dinner to run my business? No. Stuff like that. So those personal expenses, you're like, I bought a new truck last year. Do I want to take a $60,000 deduction in 1 month off of my income? No. But do I want to deduct it on my taxes? Yeah. So I'm going to show that as an indirect expense. So those are some examples.
I agree. This is the part that when you finally get a handle on this is the transparency part that if you found this through my email or Facebook, I talked about, where it's just like, we want to deduct everything we possibly can, right? Like, I get that, but there's ones that are like for the business and ones that aren't. And to see the difference in that, because you may look at, like this example right here, and let's say you're talking to your spouse, be like, oh, the business only made 17 grand this month. It's like, that's not actually true. The business made 24,000. We have a spending problem. Let's say we went on that vacation, which, yeah, we deducted because when I was out there, I looked at real estate, but that wasn't needed for the business. So that is another example, in my opinion, and correct me if I'm wrong, of an indirect expense where, you go on these vacations for like a conference, for a real estate conference. Like, that's not needed to run the business. It's absolutely something we want to deduct. So you got to include it in your books, but it can't be thrown in the mix of how profitable is my business. And so this is a thing that I could never figure out for sure. And I wasn't doing it right. And just in 1 month's time to have Austin and Becca go through my stuff and be like, here's actually what's going on. Now I know the answer of, do I have a spending problem in my personal life or not? Or is my business really just not making enough money? So that's been incredible. Just that alone is so valuable as a business owner. Somebody else asked, would you consider paying for a coach an indirect expense then?
So there's a lot of stuff that's personal preference. Like, some people put an officer salary, your salary, as a direct expense because they want to hire somebody to take their spot. With a coach, it's like, in my eyes, I would consider that a direct expense because you are doing that to directly grow your business. You're not doing that because you're friends with your coach or doing it as a casual activity. Like, you are doing that to intentionally grow your business. And if you have the right coach and you do the right activities, you should see an ROI on that. At least I would hope. So I would consider that a direct expense of your business. But I mean, if there's some people, it could go either way.
Yeah. And I would go the other way. That's just me. But Austin knows better than I do. When I think about it, I'm like, well, I don't need the coach to run my business. But that's probably looking at it too closely. And like we talked about, even with like my salary being included in the business or not, like, there are those things that everybody's going to be a little bit different. Like, if you're like, without my coach, my business wouldn't function properly, then I feel like that makes it more of a direct expense, right?
Yep.
Where if you're like half-assed doing your coaching calls and you don't really do what they recommend anyways, then is it really a direct expense, or is it something you're just kind of doing that you don't need to do? So, yeah, I don't know. But yeah, that's the best part, is you can kind of build this how you want. There's no set rules, but Austin's going to have his recommendations, which are great.
And like with our clients, as we get to know them better and know their businesses, that stuff just kind of gets worked out over time. And sure, there's questions along the way. But that's just kind of how we navigate that. And this is meant to help each individual business owner operate how they want to operate. So I give my recommendation on stuff, but ultimately it's up to them.
And I put a poll out here too, and you probably can't see this, but I don't know how many people have answered it, but I said, who here currently separates direct and indirect expenses? 0%. So, and then that's very common. Like, it's just, we're business owners, but we're like thrown into it. No one taught us how to do this, and then we have probably our tax accountant that you go to that helps with a bunch of businesses and maybe isn't understanding the real estate business as well at times, so it's a very common issue, I think.
Yep, totally. And I just want to disclose, like, we don't do taxes. So we work with your tax professional, with your CPA. So we don't give tax advice on what technically is a business expense and what isn't and stuff like that. But we do work together with your CPA. But this is, if you take one thing away from this webinar, this is something that is so simple to implement. If you guys are doing bookkeeping yourself, or if your bookkeeper is using QuickBooks, it is very easy for them to make this distinction in your P&L. You may have to upgrade to the next tier of QuickBooks, depending on which one you're in. It's not a lot more money, but you may have to upgrade to, I think, that middle tier to be able to have that class function.
And just this will tell you right away, is it a business problem or a you problem?
Yep.
And like for me, I love to know that, where I think too much of the time, especially in real estate, I'm sure, Austin, you hear all the time, when you boil down the numbers for realtors, they're not really that profitable, especially team leaders and stuff, but they're not doing it right. They're basing their profitability on using their commission, and then they're also using their expenses. And it's just like, that's no way to run a business.
Yep.
So,
Which is a great segue, Tyler.
I didn't try to do that. Look at that. I need
point. So the last one is for the team leaders that are on this call. You have to track your income and expenses separately from your team income. And this is something Tyler and I have worked through, of like, you need to know, is your team profitable without you in production? And for the vast majority of teams, that answer is no. And actually the biggest answer is probably, I don't know.
Yeah.
But then once you actually look into it, the answer is probably no. And then the answer is, how do we make changes to make that a yes? But to do that, we need to track that separately. So again, here's the same P&L. This is the commission income that's broken down a little bit more. But this team leader commission is 13.69% of the total income. So it's not a huge portion, but it's not a small portion. And it definitely impacts the profitability of that business. So we need to track that separately. We need to have the ability to remove that from the equation and assess the profitability of our team without us in production. So there's a couple different ways, without getting super into the weeds on this. The main point I want to make is that you guys should be tracking this, and how you track it and how you remove it and stuff like that gets a little bit more complicated, but there's really two ways to do it. One way is you could just completely remove that commission from the equation. So like if you're a team leader that's you're answering the phone for incoming leads, or you're doing open houses, you're generating more new business, where if you were to just stop, that new business maybe wouldn't be generated. It would maybe make sense to just remove that commission altogether. But if you're somebody like Tyler, who works with a lot of his sphere of influence, he's going to retain a certain percentage of that business. If he leaves and if he's out of production, hopefully people still call Tyler, but then he hands off those leads to his team in return for a portion of that commission, right? So there's a couple different ways to do that. In the example that I have here, these numbers on the right, this is if we remove it from the equation altogether. So we take that 66,000, we take out the 9,100, leaves us now with $57,384 as 100% of our income. In this situation, we just left our cost of sale the same. In a real world example, you may have some specific expenses that go towards the team leaders' transactions, like the transaction coordination. If they're doing 3 or 4 deals and that's a significant portion of the cost of sale, you may take that out as well. But just for easy math, we left that the same. So now our cost of sale went from 52% all the way up to 60%, which leaves our gross profit from 47 down to 39.
Yeah.
So those are
percent difference, basically, if you're doing your books accordingly to try to understand profitability of the team.
Yep.
You know what I mean? Or even if it's a small team, whatever, it doesn't have to be this major thing, but for you to pull the levers and twist the dials for lead gen or for hiring or anything like that, and you're basing it on the fact that, well, our cost of goods sold is only 52%, so our percentages look great. And it's like, oh wait, if I do this right, I'm actually at 60%.
Yep.
Oh, we can't afford to go higher than the next person, whatever. Like it can make a big difference.
Yeah. And all of these, the reason I don't show, there's a bottom half, this P&L, but all of these decisions are made, or this is evaluated in your cost of sale and your commission income and your cost of sale. So your other expenses below are probably going to be there regardless. Your people expenses, your marketing, your overhead, like that stuff's not going to go away whether you're in or out of production. But taking that income out of the business or replacing that with a smaller percentage of that income that you're going to retain and adding to your cost of sale of what you have to pay an agent to facilitate that deal, will allow you to just have better transparency to see, is your team profitable? And from speaking personally, when I first looked at this, I was not. And I had to make some pretty drastic changes to our splits of our team so that I could be, because guys, like I said, I got into real estate for the freedom. It's not freedom when you have to continue selling houses to pay the expenses for your team.
Right.
That's literally what you're doing. You're literally selling houses to your sphere of influence, to your people, to pay the expenses for your team. Just let that sink in. Like, think about that a little bit in where you want to be long-term with your team. And that's really, people build a team for the freedom to get out of production, but you have to be moving in the right direction. You have to know what's going on to be able to move in the right direction of getting out of production. Right. So this is so for the team leaders that are on the call. If you want to sit down with me and like have me look at your P&L, depending on how you have it set up, I'm happy to just kind of walk through it with you and give you my thoughts and help you do the math on your P&L. We'll have a QR code at the end of this that you can scan, and I'm happy to help at no cost with you guys on that. So,
yeah, and a couple things. One, I can't stress enough the fact that Austin's also a team leader. So he speaks your language, he speaks real estate, and he also has made these changes in his business. So that's why I felt like if I'm going to spend my money somewhere, I'd rather spend my money with somebody who can maybe help me with some of these things that I don't understand as a team leader. So that was really helpful. And second thing, I'll just point out, whatever you said, I think got through to somebody, because now we have one person that said they separate their direct and indirect expenses. So whatever you said, I think they just went back, redid their books right now.
I bet it was Kyle.
We have one. Yeah. They're like, screw it, I'm separating them right now. It was probably Kyle. Sounds like a Kyle.
So guys, some key takeaways from this. Set up your P&L properly, utilizing these 4 strategies. If you didn't write them all down, we'll send you the recording. Update and review this on a monthly basis. Your financials are not something you should be looking at once a year or at tax time. This is something that you should look at on a monthly basis. That's why we pride ourselves in getting our clients their financials in the first 7 days of the month. So you are looking at last month's financials in real time in that first week of the month. When I first hired out my bookkeeping, I got nothing for 6 months. My business was moving way faster than my bookkeeping was. So it was a completely different business by the time that I got bookkeeping from 6 months ago. So it's important that you're looking at this, you're evaluating it in the eyes of a business owner. So all of us, like I said, are salespeople. That's why we got into real estate, to sell houses. But we need to look at our financials, even if you're an independent agent, in the eyes of a business owner. If you're an independent agent, there's a cost associated with being a part of that brokerage or being a part of that team or paying for that lead source. What's your ROI on that lead source? You have to look at this in the eyes of a business owner. And ultimately, like I talked about, just be intentional about how you're managing your resources and have an idea of what's going on so you can be intentional about your giving, be intentional about your hiring and firing, about where you're spending your marketing dollars. That word intentionality just really stuck out to me as we were preparing for this webinar. It's so important. You just have to have an understanding to be able to be intentional.
Really quick, somebody had a quick question, and I think it's for me. They said, Scott asked, there was a comment made that I used to scan receipts. What is your current method of entering and tracking? So, I used to. So my father has been in real estate forever. I was always told to keep a shoebox of receipts, all that stuff at the end of the year, and scan it in so that I had record of it. But what I currently do with QuickBooks, it connects to so many things. It connects to my credit card that I have just for business. So I would recommend getting a business credit card that you solely use for business expenses. That could be indirect or direct, but all expenses go only on that card. And then I have multiple bank accounts that I separate my business, and that Profit First book will explain that pretty well. But all of that gets synced into QuickBooks. So now I don't have to show proof of anything because it's all on there. Every charge I've ever had is in the QuickBooks, and there's proof of it. And then the few like mortgage statements, things like that. My tax person, I just upload that electronically to them, but I don't have to scan in any more receipts. Anytime I go out to eat, I don't keep the receipt, none of that type of stuff. You do what's best for you. I keep a really good calendar. So if I ever had to get audited or something, I can go back and look at what I was doing at that time. So anyways, any other comments you want to make on that one? Austin, what do you do?
Yeah, I mean, you should keep some form of receipt. So you can, in QuickBooks, there's a way that you can scan it into there. Like some of our clients have that. I'm not sure if you do or don't, Tyler, but you can scan it into QuickBooks and then we'll categorize it right to that transaction and it'll live there forever. Then you can toss out the paper receipt. I personally, I just keep my paper receipts in a stack in a folder. But Becca goes through our financials and categorizes everything. If she has a question on what something is, she can look at the receipts. So I keep them just to keep them, to say I'm keeping them. But
I think with the QuickBooks app, I believe you can take a picture too of, like, instead of keeping the receipt, just at dinner, take a quick picture, it uploads it right to your QuickBooks, and then you're done. So
yeah, that's honestly the best way to do it.
Yeah.
Is to do that, to just snap a quick picture. It lives in QuickBooks forever with that transaction. And then if there's any questions at a later date, you can go back and it's there. So
yeah, if you're not keeping your receipts, you just have to have a really good tracking system so you know what were you doing at that meal, let's say, or whatever, so that you can tell your story if you ever do get audited. So do what's best for you guys. For me, I have my systems. I'm not recommending that you do it, but just wanted to explain what I do.
Yeah. And lastly, guys, I was kind of debating putting this slide in here or not. I don't want this to come across as arrogant, but I got into real estate for the freedom, guys. I got into real estate. I'm a huge outdoorsman. I love going on hunting and fishing trips. We bought a house that I wanted to do a lot of remodeling on, and I always kind of felt guilty taking money from the business. I had the mindset of reinvest, and felt guilty when I had to take money out. And since getting control of my financials, since implementing a system like Profit First, I now pay myself consistently every 2 weeks, and I bonus myself every quarter. And all of these things that are on this slide are things that I'm super proud that have been paid for guilt-free by my businesses. Got to go on an elk hunting trip with my buddy Cameron, who I think is on this webinar.
Cameron McClellan?
Yep.
Yep.
He took that picture in the upper right-hand corner. The middle picture was a sheep hunt in Hawaii. We remodeled our kitchen in our house, remodeled our bathroom. Like, these are things that I would not have otherwise been able to do, and I would have felt guilty pulling money out of the business to do these things. So I can confidently say that I have that freedom now. I have that control over my finances. I have a level of financial freedom in my life because of making the decision to get control over my finances. And did I have it immediately? Like I started getting control of it and I looked at it and I immediately have freedom? No, but I immediately have enough information to make changes to move in the direction of that financial freedom. And that's what I did.
Yeah.
So again, guys, I'm not here to sell you on working with us. I'd love to sit down and have a conversation if that's something you're interested in. Bookkeeping is a non-negotiable. You're going to do it. Your CPA is going to do it, or you're going to hire us to do it. It's got to get done. So that's why we offer that service. I'm obviously passionate about helping people, specifically in the real estate industry, take control of their financials. So if you guys scan this code, it'll take you to a Calendly link to get on my calendar. So if you want to do a review of your P&L and look at your bookkeeping that you have now, help you make some changes on what you can do for 2024, happy to do that. If you want to get a proposal on what it would look like to have us to do it, happy to do that as well. So
yeah,
Yeah.
I'll say, so Austin's not going to sell you, but I'm going to, because I'm pretty passionate about just the stress being taken off my plate, first and foremost, to have someone else do my bookkeeping. So if you guys are like me, I was doing it myself for years. I would stay consistent for like a month. I would fall off for 6 months because it would get crazy busy. And at the end of the year, I'd spend like a week trying to remember everything I did and putting it all in the QuickBooks. And it just was not working. It just was sloppy. And yep, I'd get it done and I'd feel good about it, but I would have no clue on the profitability of my business. I would not feel like I had a good grab on anything. If people would ask me about my business, I wouldn't be able to tell them much else other than, yeah, we're making some money, So the process with Austin, just to give you guys like from the outside looking in perspective, like you sit down with Austin, they'll do a quick discovery meeting, and then Austin gets out of the picture because the brains behind the operation is Becca, his wife. And Becca, I mean, you all kicked your coverage with Becca, buddy.
Absolutely.
Becca does an awesome job, and she's the real deal. She knows exactly what she's doing with your stuff. But she'll sit down, and you could go as far back as like the last calendar year if you want them to redo your whole books. They can just pick right up where you left off. And if you're like me, after like 2 months of that, you're going to want them to go back and do everything because it's way better than what you were doing. But just know that it's going to give you complete transparency and allow you to feel confident in pulling the levers you need to pull in your business, whether you're a team leader or a solo agent. But any team leader watching this, like, you got to do it. In my opinion, it is the best way to run your business. And then you'll never have to feel dumb if somebody asks you like, oh, what's the profitability of your business? Like, we don't know. We're just guessing. So that's my little commercial for Austin. Fantastic people. The cost, depending on what you're looking at, is not crazy. To me, it's well worth the price. And, hope that I don't have to ever do my books ever again.
Awesome. Thank you everyone for being here. Thanks for hosting this, Tyler. And yeah, a lot of fun.
Yeah, no problem. Thanks everybody for attending. Like I said, if you are watching this live, you will get the recording sent to you. But reach out to Austin. He's awesome. And Becca's even better. So, but yeah, with that being said, I hope everybody has a wonderful day, and reach out if you need anything. Both me and Austin are always an open book when it comes to our businesses. So
thanks, guys.
Yep. Have a great day, guys. Bye.